week on the Communicators, a discussion on how federal regulations impact small cable operators. Our guest is Matthew Polka, president of the American Cable Association.
Well, the American Cable Association is a trade organization that represents small and medium-sized cable operators. They've just concluded their annual meeting in Baltimore, and we're pleased that their president and CEO, Matt Polka, has joined us this week on the Communicators to talk about some of the legislative and regulatory issues that the ACA faces. Amy Schatz of the Wall Street Journal is our guest reporter this week. Mr. Polka, if we could start with the Comcast-NBCU merger, something that you discussed and heard about at your annual meeting, and this is a quote from you about that merger. Approving the biggest media merger in a decade without meaningful conditions would deal a serious setback to federal competition policy, with the result that consumers will be forced to pay more for the same cable and broadcast programming that they are receiving today. Could you expound on that a little bit?
Sure. This is the largest merger in a decade. It's a unique merger that combines the largest cable operator in the country for the first time with a broadcast network. This has never been done before. We're talking about the combination of significant programming assets, which, when combined and leveraged by Comcast, the merged entity, will provide significant rate increases to consumers. And by that, what I'm talking about is the fact that Comcast already has significant programming assets, 9 regional sports networks. There are 10 owned and operated NBC network stations, as well as more than 20 NBC Universal programming services that are seen today on cable. When combined as one entity, these services can be tied and bundled to the detriment of consumers, because what happens in a merger like this is the entity takes these assets, uses them to their advantage, and is able to price them at higher prices in the marketplace.
So you see vertical and horizontal problems with this merger?
Clearly. Vertical from the standpoint of competition in the marketplace. We have a number of our member companies that are in direct competition with Comcast in markets where there are regional sports networks, where there are owned and operated stations. We all buy programming from both Comcast and NBC Universal. So we know that that is going to be a significant problem dealing with what is a merged entity, particularly as smaller companies that already now have a difficult circumstance in dealing with larger entities and in negotiating for those prices, terms, and conditions. That's on the competitive side. On the horizontal side, what we're talking about is, again, the combination of all of these programming assets, significant programming assets. And the harm is on the local level, where you have a large entity like a combined Comcast, NBC Universal, negotiating with a smaller, mid-size cable operator for the right to receive cable programming, regional sports programming, and NBC owned and operated network programming.
So when you talk about concerns about the programming that your members would be able to get from a combined Comcast-NBC, are you really concerned about that from a more of a cable perspective of getting the programming for your cable channels, or possibly for online video, or is it a combination of the both?
It's a combination of actually all 4: cable programming, regional sports, network programming, retransmission consent, and online programming. And here's a case where I would even say that when you look at how this merger should be conditioned, that some of the conditions that have been offered by Comcast aren't sufficient, because you mentioned online programming, which is a completely new world that not many of us really know what is going to happen in the online programming space. The program access rules at the FCC don't specifically cover online programming. The conditions as suggested don't specifically cover online programming. Will our members have access to that programming, that online programming, that they can use also in their systems to provide those services to their customers? We don't know that. And that's part of the problem, is that the conditions that have been announced, at least by Comcast, are not sufficient to cover the vertical as well as the horizontal aspects of the merger.
So when you're talking about conditions, then, you've said that you think that the merger should have meaningful conditions.
Definitely.
How would you define meaningful, and do you have a few suggestions on things that they should do?
Meaningful conditions to address clearly the harm that our members are going to face from a pricing and negotiation standpoint. Our board of directors has met this past week in Baltimore at our independent show. We're working through those conditions. We expect to be filing soon at the FCC. And we know that we will be specifically addressing not only the vertical as well as the horizontal harms that will result in the merger.
Do you think it's past time, though, to file at the FCC? Is there still a window of opportunity to stop this merger?
Oh, well, from our point of view, what we think is important is that the merger should be conditioned. We have said that all along, that the concerns that our members have raised need to be addressed by the FCC and the Department of Justice, whether they are more process-oriented to revise the program access rules, the good faith negotiation rules, the arbitration rules, whether they are based on specific negotiating issues, or whether they're structural in terms of the assets of the company and what should be done with the assets of the company to address it. But we're actually in that phase right now with the FCC, where both the FCC and the Department of Justice will be reviewing comments. The comment cycle is still open. Comments will be due in early August, where ACA will be filing comments specifically on what suggestions we think should be imposed on the merger, and that process will occur this year. Most people believe that this merger will be handled sometime this year or maybe into the first quarter of next year.
Is there a legislative solution in your view?
Not really. Congress has had 4 hearings on the merger. One of our board members, Colleen Abdullah of Wide Open West, has testified in 3 of those hearings and has raised significant concerns about her company and what it will face in, for instance, the Chicago market, where she competes with Comcast, has to buy regional sports programming, has to buy an NBC-owned and operated station through retransmission consent, as well as cable programming. So those concerns have been raised. But Congress is really in more of the oversight role as it relates to the merger. And what we'll see here is the FCC and the Department of Justice actually having the primary jurisdiction.
Amy Schatz, another question on NBC, or move on to a new topic?
I just have one final on Comcast. Comcast has been spending a lot of time talking to interest groups that are really involved in this merger, whether it's network affiliates or it's minority groups, to try to come up with some kind of agreement before this gets to the FCC and gets to the condition stage. Do you feel like you can have those kind of negotiations with Comcast, or do you think that this is really going to have to come from the FCC?
Well, I think it's a regulatory process no matter what. Whatever results will be encapsulated, so to speak, in a final order. We hope that discussions occur. We have been very, very open. We have a very open door policy, and we have made very clear what our concerns are for our members in terms of the specific harms that we feel that we face as smaller operators, having to deal with not only what is the largest cable operator in the country, but now a network as well combined, and what we will face in terms of discrimination in our marketplaces because we're small, and it really comes down to big versus small. We've made those concerns clear. Those concerns have not been addressed in terms of other ideas that may be proposed to resolve our circumstances. And so the process will definitely go forward as we file comments, but at the same time, we hope that there can be discussions that take place.
Well, on a semi-related matter,
Sure.
as far as some of your concerns, the American Television Alliance, I want to show this full-page ad that was in the Washington Post a few weeks ago. And it deals specifically with retransmission
Correct.
rules. What is the ATA, and what are your concerns about retransmission?
The American Television Alliance is a group of 33 diverse voices that have come together to say to Congress, to the FCC, to lawmakers, to others here in Washington, that the retransmission consent rules that govern cable and broadcast negotiations are broken. Quite simply, that is the message. These rules that were put in place in 1992 to give broadcasters the opportunity to select negotiation for carriage of television signals, put in place for a specifically different reason in 1992 compared to where we are in 2010. And we believe that as a group of 33 participants, whether we're talking about small cable operators, large cable operators, DirecTV, Dish, AT&T, Verizon, small telephone organizations, public interest organizations like Public Knowledge, that the time has come for the FCC to take a specific look at these rules and to determine whether the rules should be changed 18 years after they've been passed by Congress. And that's our message. All we are asking right now the FCC to do is to launch a formal rulemaking based on a petition we filed earlier this year to look at the rules in 2010 and to determine if those rules should be modified for the benefit of consumers.
I mean, these rules have been in place, as you said, for 18 years. Why now? I mean, what has changed that requires the FCC to get involved and actually change the rules?
A lot has changed in the broadcast business, which is going downhill, quite frankly, and that's why this has become a much more serious problem. In 2005, broadcasters asked cable operators and satellite providers to pay approximately $215 million in retransmission consent fees. In 2009, in an intervening period where we had one of the worst economic times in our country, that number increased to $767 million. In 2010, the payments made by cable and satellite and telco providers to broadcasters is going to be $1 billion. And that number is increasing. And the reason is because broadcast ratings are falling, advertising revenue for broadcast stations is falling, and they need to make up the revenue. So they're using these government rules that were put in place in 1992, as well as the network non-duplication rules back in the 60s at the FCC, which gives broadcasters a monopoly market to charge what are monopoly rates. That's what's happening, and that $1 billion figure in 2010 is only going to increase. Where does that end up? That ends up on the bottom line to the consumers. At our independent show this week, it was a major issue with our members. I had member after member coming up saying to me, I am now adding $4, $5, $6 to my basic cable service for broadcast television, for what the broadcasters call free broadcast TV. It's not free TV because of these outdated rules that need to be changed for the benefit of consumers.
So are you suggesting then that they shouldn't get any payments made to other cable channels? You paid to have ESPN on, or FX or
Absolutely.
whoever on your channels. Are you saying that that should either be capped for broadcasters, or that
No.
it just they shouldn't get it at all because they have the right to be carried on your
Sure.
networks?
There is no doubt that broadcast channels are important to our members, and they do want to carry those. The issue comes down to be the negotiation of a price in what is a fair market. The broadcasters will say the American Television Alliance is misleading Congress because retransmission consent is already negotiated in a fair market. Well, it's not. The network non-duplication rules, which were designed for a completely different purpose in the 60s, basically put a barrier around the designated market area of the broadcaster, and basically that broadcaster has unique exclusive control over that market. We cannot get a lower priced station even if we wanted to help to lower the price of retransmission consent. And so what we're saying really are two things. These prices should be negotiated in a fair marketplace. And secondly, a unique concern for our members is the fact that I come back to the big versus small. In our marketplaces, because we're small and we have a smaller portion of the marketplace, broadcasters typically will charge our members 20 to 30 or 40 or 50% more for retransmission consent for the same signal. And again, that's impacting consumers. And what we're trying to do is to change these rules ultimately so that retransmission consent can be negotiated in what is truly a fair market and what is compared to what is now not a fair market.
Well, this is the response from the National Association of Broadcasters to your concerns. Pay TV built its business on the backs of broadcast programming, and it is not unreasonable for local TV stations to expect fair compensation for the most watched shows on television.
Sure. Pay TV also helped take broadcast stations to places they didn't exist because of the technology of cable television. We were not compensated for that. And that's something that our members still do in very, very small and rural areas all across the country. The fact is that our members don't object to paying a price for retransmission consent. What our members object to are paying a discriminatory price for retransmission consent simply because they're small. And that impacts our consumers who have to pay more, and it also impacts another key goal of Congress and the FCC right now, which is to get more broadband to smaller markets and rural areas. Every dollar more we pay that's a discriminatory price demanded for retransmission consent is a dollar less that we have to use in broadband deployment where we have unserved markets, underserved markets, and markets that are demanding higher capacity broadband.
You've urged, Matt Polka, a legislative solution to the retransmission issue.
Actually, retransmission consent has been considered by Congress from time to time. What we are actually working on right now, and we have sent to Congress, or actually members of Congress have sent to the FCC, a letter suggesting that the FCC should act. In the short term, it is not likely to see that we will see any legislative action on retransmission consent. But what we have asked members of Congress, and some of them have done so, to send a letter to the Congress to simply say it is time for the FCC to simply review these rules. It's something exactly that Chairman Janikowski said earlier this year. In March, he testified before the Senate Commerce Committee, before Senator Daniel Inouye, who actually wrote the rules, and Senator Inouye, who wrote the retransmission consent rules and considers himself the father of retransmission consent, said, I think it is time for the FCC to exercise its oversight authority over retransmission consent for the benefit of consumers. And what Chairman Janikowski said was, this will be under active review at the Commission. And what that means is simply that the FCC must put this rulemaking out for public comment, rulemaking, et cetera, so that we can have a public debate about this going forward.
Recently, some members of Congress have been circulating letters asking colleagues to sign on to ask the FCC to act on this. And they got, I think, basically two dozen members to sign on to those letters. Are you concerned that just such a lack of support there is not going to prompt the FCC to do anything?
Not at all. Congress has a lot to do. There's no doubt. It's a very important year. Elections are certainly on the top of mind for lawmakers. It's a busy, busy time. We're not concerned about that at all. The fact is that the American Television Alliance stands for something that is cumulative. For many years at the American Cable Association, we have felt as if we were the canary in the coal mine, the only one talking about the specific harms of retransmission consent because we felt it the most as smaller providers in smaller markets. But now, over time, as this system has continued to break down, you have more and more diverse voices coming with the same concerns. Now we're not alone. And so continued year after year cumulatively, the message about the harm of retransmission consent is growing, and it's something that really can't be stopped.
This is C-SPAN's Communicators program. Our guest this week, Matt Polka, President and CEO of the American Cable Association. Amy Schatz with the Wall Street Journal. Next question.
So Matt, I wondered if we could talk a little bit about net neutrality.
Sure.
And where your members stand on that, because the FCC is spending a lot of time right now working on that and trying to find some kind of solution to make everybody happy.
Sure, the so-called third way. We're very concerned about it at the American Cable Association for the simple reason, really, of why we exist. In 1992, our organization was created because of the impact of regulation imposed when Congress re-regulated the cable industry and had a disproportionate impact on smaller providers, of which I was with the member company at the time. The same thing is really analogous here. The impact of Title II common carrier regulation could have a significant disproportionate impact on our members' ability to provide a broadband service in their smaller markets, rural areas. And so that's why we have expressed caution. At the same time, we've been open with the Commission, and we seek through the comment process to have a dialogue with them about those specific concerns. At the same time, we've raised some legal questions about how the FCC is going about its broadband reclassification third way consideration. The FCC is doing this through a notice of inquiry, and they intend to go from there to what they consider to be a declaratory ruling or something like that that would impose regulations. To me, that's really a violation of the Administrative Procedures Act, which requires a notice and comment rulemaking, and then requires what is something that's very important to us, which is a specific Regulatory Flexibility Act review that requires the FCC to determine the impact of regulations on small companies. Right now, that's not contemplated. And so while on one hand, the chairman would like to impose regulations that he thinks would be helpful to greater broadband growth, it could have the exact opposite impact on our members who have to deal with the cost, the unfunded mandate of regulation that could actually have a chilling effect on broadband rather than something that would encourage it.
Can you explain why this would be a bigger concern for smaller companies than for larger companies like Comcast or AT&T, who are also pretty unhappy about this idea?
Sure, no doubt about it. You start from the premise of companies that are right now essentially lightly regulated in the broadband space. And that light regulation has been what has spurred significant broadband deployment in our members' markets. And again, coming back to our independent show, excellent stories of high-speed broadband delivered in very, very small communities. One gentleman yesterday, Jim Gleason of New Wave Communications, our independent operator of the year, was talking about significant broadband deployment in towns of a couple of hundred people That's the kind of great story that this light regulation has imposed. The problem is if you shift from what is now a lightly regulated service to what becomes a highly regulated service under Title II that has administrative filing requirements, that has potential economic regulation, that has a significant impact, and I don't think anybody's seeing this, under Title II, our cable rate pole attachments that we pay now would go, we had a member yesterday say, my rates for pole attachments, just to put those lines on the line, will increase from $2 per pole to $10. And if you're talking about a small company in rural America, you don't just simply make up that $8 a month. It's just not happening. And so that's what we're concerned about, and that's why that any specific regulation has to go through a notice of NPRM and then a Regulatory Flexibility Act.
Matt Polka, why does a different type of regulation increase pole costs that much?
That's just the difference between what is now a lightly regulated broadband rate under the current Title I regulation compared to what are the regulations and the requirements under Title II as a common carrier telecom rate. There's a difference between the cable rate and the telecom rate, and that's the increase, $2 to $10 in many cases. And if you're a small provider, I mean, that's not something you just simply absorb because that's actually a cost that could be a killer for companies. And we don't like to say that because it's just, but the fact of the matter is that, members have come to us and said, if that rate goes up, I mean, regardless of all of the other potential regulation, if that pole rate is increased from $2 to $10, then we may have no choice but to shut our business down. And that is not a good example of broadband deployment.
So one of the things that the FCC chairman's office has been doing is trying to have negotiations with various groups about this issue so that they don't have to go down this Title II route, which everyone is extremely upset about. Are you okay with some of the FCC proposals that they have come out on net neutrality? The proposal they brought out last year, where they were suggesting some more formal net neutrality rules, is that a better way to do this than going down the Title II third way route?
It could be. It really could be. And some of the ideas there, although there have been many, have been consideration of the current so-called net neutrality, the four net neutrality principles, plus non-discrimination or plus a discrimination principle, adjudicated or sort of reviewed on a case-by-case basis. That would be something that I think would be certainly important for our members to consider and would be willing to consider, because our members look at their pipe now and they're not interested in discriminating. They're interested in providing the highest level, the fastest level of broadband service to their customers. What we fear the most is, going back again to my 1992 example, the imposition of significant regulation on a business that has a chilling effect on further development. And there is a difference. You mentioned, sure, the larger companies are concerned about it too. Well, they should be, but the impact, pound for pound, person for person, dollar for dollar, is not the same on their companies as it is on ours. It's much, much higher and has a much more significant impact.
Matt Polka, have your companies and your customers benefited from the National Broadband Plan?
Not as much as we had hoped. I'm sorry, I thought you were talking about stimulus there. The National Broadband Plan itself remains to be seen, okay, because from the broadband plan itself, there will be 60-some rulemakings that will further occur. So that remains to be seen. But I do think that a number of the ideals and the ideas in the broadband plan have been sensitive to our concerns as providers in smaller markets, and we're very hopeful that the rulemaking process itself will bear that out as time goes on. So we'll wait and see, but we know that there'll be a lot more work for us to do here in the coming months and years.
Broadband stimulus money.
Broadband stimulus has been more of really a problem, and frankly, in our view, an unmet hope. When broadband stimulus was announced last year with the $7 billion in stimulus, our members thought that for the first time this might be a government program, government assistance, that would truly help smaller companies to provide broadband services in unserved markets where it doesn't exist. If anybody's going to be eligible for services like this, you would think it would be our members who are really on the cutting edge of these areas, and certainly are eligible and in areas that are underserved and unserved. Well, what happened, unfortunately, in the the political desire to move the funds out has been really a rulemaking process that resulted in similar rules that have been implemented by the U.S. Department of Agriculture, Rural Utilities Service, literally for decades, that really favor previous borrowers and users of funds. So the way the rules have been written, it really prevented opportunity for our members as what are new technologies to take advantage of them because of the haste to try to move this money out, and there's still that haste that exists today. So as a matter of fact, in the first round, out of our 900 plus members, we had approximately 83 members, about 85 members that applied for funds, and only 3 of them actually received at least the notice that they could receive funds. And to me, that's a lost opportunity. There are other situations that our members have faced where they have gone out there with their own sweat equity, their own private equity, their own funds to provide broadband services, and they've had to face situations where government-funded overbuilders are coming into their areas to provide broadband service where it already exists. And to us, that was a fundamental problem because we said these taxpayer funds should be used to provide service where it doesn't exist today. Don't use taxpayer funds where there's already people out there providing services which you have asked them to do and they've done it. And frankly, we've had to deal with a number of circumstances like that, and it's been disappointing. It's been very disappointing, but frankly, it seems as if the die is cast and the money will be distributed along the same lines, and we'll have to deal with that on a case-by-case basis.
Amy Schatz, last question.
So do you think that any of your members are going to try to get stimulus funds in the future? And do you think that the problem that you've had with getting stimulus money for broadband could also translate into problems getting USF money for broadband in the future as the FCC moves forward?
It's a good point as it relates to the broadband plan because universal service is a key component of that. We hope that the same things that have happened under the stimulus program as well as the previous broadband loan program at the RUS, we hope that that does not happen and that the FCC in the reconsideration of universal service under the National Broadband Plan will be more open to new technologies. As it relates to your question, will our members apply for more stimulus based on the results of the first round? Not likely, but what our members will do is they'll continue to provide the same level of customer service that they have. They were at our independent show this week learning about new technology, online programming, how to provide faster broadband speeds, and they are dedicating themselves to become the best broadband provider in their community, and that's their goal going forward.
And finally, Matt Polka, given some of the issues that we've discussed on the Communicators in this past half hour and some of the issues that you discussed at your annual meeting, do you feel that the ACA has a voice at the FCC?
Sure, I surely do, and this is something that we've worked very, very hard since 1993 to build. We built this organization as 150 small cable companies, and I was one of them at the time, really out of desperation because Congress had re-regulated the industry in the 1992 Act, and it had a disproportionate impact on smaller companies. And as smaller companies, we recognized that, and we recognized that we did not have our own independent voice. And that's what we created at that time because we believed, as we do now, that if anybody can tell our story, who better but ourselves to tell that story because we live in these markets that most people are not aware of. So we have done that since 1993, and we've worked very, very hard to develop that voice. It's been difficult because we're competing with oftentimes the very largest entities in the communications space, but I think we've done so through our dedication, through our commitment, through our seriousness, and the fact that we're here to stay. And that's one thing that our board has made clear. We are here to stay, to work in Washington, D.C., and to make sure that independent cable operators all across the country are represented in Washington.
Matt Polka is the President and CEO of the
Thank you very
American
much.
Cable Association. Amy Schatz with the Wall Street Journal. Thank you both.
Thank you. Thanks.